Okay, quick sound check. We should be good. So we're gonna start earlier. There's a lot of stuff to talk about today. So just a quick general advice and risk warning disclaimer. Note that any advice given is deemed to be of general nature, as the information or advice given does not take into account your particular objectives, financial situations, or needs. Therefore, at all times, you should consider the appropriateness of the advice before you act further. CFDs and Forex are leveraged products and thus carry a high level of risk and are not suitable for everyone. You can lose more than your initial deposit, so you should ensure CFD and Forex trading meets your investment objectives, strategies, and charts used in this presentation. Or for example only, you are reminded that past performance is not indicative of future performance. Okay, so we do have a lot of things to cover today. There's a lot of questions out there. First up is Pound USD. Sorry, I'm just going to clarify this one for Albert here. If sterling turns down, yes, there's a potential for a hidden bearish divergence on Pound USD. It's below the Ishimoku cloud. I don't really see an issue with this one because it kind of directly links to what Sujita is asking. If Fed raises 75, what will happen to Euro USD and Pound USD? The same if Fed increases 50, what do you think will happen in your opinion? So, before I go through the Feds, just want to let you guys know, the ECB is meeting right now. There's an unscheduled meeting right now that's ongoing. We're just waiting for news to come out from the ECB. One of the few problems that they have is the Italian bond prices is really going up really high. So it's on the back of the expectation that the ECB is going to hike interest rates soon. They're going to end asset purchases soon. The borrowing cost starts to go up already, and that's what the ECB is meeting up today, because this is the same scenario that was about 10 years, exactly 10 years ago actually, when the Greek debt crisis happened. I think Italy was part of it, Spain was part of it, but I'm sure it was Italy and Greece. Nearly bankrupt the Greece government. So the euro nearly failed 10 years ago. That's the same situation. Although in terms of economy, they're doing a lot better right now. But they're meeting today, unscheduled right now, just to talk about what they're going to be doing. So the ECB will likely announce what they are going to plan. So what they're planning to do. Okay. Whether or not they're going to end asset purchases or they're going to hike, that's going to be laid out today. The meeting today was for that. Any plans going forward so as not to scare the market. That's basically what the ECB is meeting right now. Okay, so with that, think about it. The Fed is likely going to hike. I'm actually going to throw in a question whether you guys think it's actually going to be 50 basis points or 75. Fed does mention they are probably not going to go for 75, but again, that was before the latest CPI number was, the latest CPI headline was at actually 8.6. It jumped up. So instead of it going down, it actually jumped up to 8.6. So the Fed might actually do 75. There's that possibility there. In terms of potential probability, we're probably looking at about 70% that they're going to hike to 75 basis points. But in terms of range, it's going to be 50 to 75. So if they do 50 or even if they do 75, it's not going to change much. I think we are potentially going to be looking at further dollar strength, but we'll take a look at the dollar index as well as the 10-year bond to kind of figure out where it stands. But Pound USD, yes, there's a potential for a hidden bearish divergence where price is creating a lower high, but stochastics creates a higher high. Okay. Now Gregorius is asking, do you have any explanation why yen, despite their dovish stance, seems to be making a fight in the market? I think I put this out in the Outlook. Last week there was a joint statement between Bank of Japan and the Japanese government that they are potentially going to be intervening if the yen goes too low. In terms of how low they want it to go, they don't really mention it, but it's not too bad for Japan to have a weaker yen at this point in time. Boost their export, and they are opening up their borders for tourism, I believe, starting this month. But I need to double check on that one. But that's good for tourism, and if COVID cases doesn't, there's no outbreak or anything like that, then Japan is probably going to be a cheap place for tourists to go to. So yeah, there was a joint statement last Friday from Bank of Japan and the Japanese government, talking about the potential that they could be intervening if the condition with the weaker yen goes too far. But how far is it going to go? We don't know. Okay, so 75, yeah. So yeah, I mean, with the CPI that was 8.6 last week, I think there's a lot of concern going on about tonight. I think there's a high probability that it's going to be 75, but I'm still gonna stick to what Jerome Powell mentioned, that they're gonna stick with 50. But again, things are changing really quickly. We've got the UK rate statement tomorrow. Initially, we are looking at 25 basis points. I think right now the market consensus has gone up. There's a potential for a 50 basis points hike tomorrow from the UK. But in any case, let's take a look at pound USD, because we don't really want to delve in too much on pound USD in terms of data and stuff like that. But yes, pound USD, we are looking at a potential for a hidden bearish divergence on one condition. Price doesn't go any higher than 1.22, and it closes below 80 on the hourly time frame. In terms of key support, we are actually at 1.2. We actually broke below 1.2. I'm not sure if it's on the daily. The daily is actually exactly at 1.2, but on the hourly time frame, it did went down to about 1.950. Okay. Fib wise, let's do the maths. We're about 61.8 in terms of capping the limit. We're looking at potential resistance coming in at 1.2150 at 78.6%. So if you do plan to go short, best case scenario would be for a close below 1.2075. Stop losses just above 1.2150. Okay, in terms of target level, we are probably going to be looking at 1.1950 first, but it's you can adjust it as you go along, because there's a potential for this one to create a new extension. If it does go below 1.2075, that would be below 23.6% as well. Then we are potentially looking for a return towards 1.19. That's a lot. I mean, we are talking about a potential of 170 pips gain, risk to reward ratio 1:2, risk to reward ratio. I think it's a great trade. Just do keep in mind the potential stop for this one is at about 80 to 85 pips. So yeah, I'll be watching this one. I'm just waiting for confirmation for this one to close below 23.6%. If it does close below 23.6%, then I actually prefer to go short on pound USD. But again, there are requirements. One is for the stochastics to close back down below 80. If you are new and you just joined in, or you just didn't know what my stochastic settings are, it's 1455. Okay. I do want to see two criteria. Criteria number one, I want to see price close below 23.6% without creating a new high. That would be below 1.2075. And then I want to see stochastics close down below 80. So this is a trade you can probably prepare for the next 4 to 5 hours, just potentially before the Fed happens. I don't think we're going to be looking at a market that's actually flat. Just be mindful here, because if we don't have the unscheduled meeting by the ECB right now, I expect the market to be flat until the FOMC. But things are looking different. We've got the ECB meeting right now. I think that's a concern there. If ECB starts being dovish or whatever, or being even more hawkish, then pound USD could be affected, Euro USD could be affected, Euro pound could be affected. So I do want to focus a little bit more on the Euro crosses here as we speak right now. Okay, So taking a look at pound USD, let's double check it with euro pound. So euro pound has already started moving to the downside in terms of daily momentum wise. It's actually really flat right now. In terms of potential extension, we are still using this one here. We are still at 127.2%, cap at 127.2%. Going to the hourly time frame. Well, we are above the Ishimoku cloud, so if price is actually there's one level you need to watch out for. It's actually 1.86. If there's no hourly close below 86, then you know the whole situation is this. I'm not sure what's going on with the euro right now. It's gonna be really speculative. If you jump in on the euro right now, I would wait to see what the ECB has to say, ideally before FOMC happens. But in any case, just be mindful. I'm just waiting for news to come in, but we don't have anything yet. I think the meeting started at 9 GMT. So about 2-3 hours ago, we should have something in the next hour or so. If we have good news, or at least the ECB says, you know what, yes, we're going to be hiking interest rate, and this is the plan. We're going to end asset purchases this month or next month, and we're going to start hiking next month. So in July, August, and September. Then at the very least, we know what the ECB wants to do, because right now we don't know what the ECB wants to do, and that's basically causing the problem with the bond markets. I know we don't normally deal with the bond markets, but I need to show you what's going on with the 10-year Treasury yield from Italy and Germany, as well as France. But we'll take a look at that in a minute. But in the case that ECB outlines the program or when they're going to be hiking interest rate, euro pound could bounce back up, because any news or any confirmation from ECB about them hiking rates, that's considered to be a hawkish move from the ECB, and that would be good for the euro USD, euro pound, euro yen, and that's probably why you see the movement in the euro USD the past 2-3 hours. It's starting to pick up. Okay. So yeah, let's talk about the bond market first before we go on into any others. Let's take a look at the German bond market. Let me go to the daily. This one pulled back down a little bit today, but if you look at the trajectory after the whole thing with the ECB press conference, that was to the upside. So we do have the movement down right now because the ECB calls for the meeting right now. So we don't really know what's going on. They're definitely going to deal with this, because they don't want the yield to go up not too quickly before they even hike interest rate. That's one. Okay, but let's take a look at the Italian yield. This one is the one that's causing a lot of problem. It's just jumping up too high. In the past 5 days, it's like 1% up. Okay, so this is one of the main problem. So treasury yield on Italian bonds is at nearly 4. Germany 1.6, France 2.2. So France and Germany, I'm not really too concerned, but Italy, that's basically the whole talk about why the ECB is having the meeting right now is because of this. Okay, US 10-year Treasury yield. That's pulling back down a little bit, but that's okay. We're still within trajectory on this one, so we'll see what happens here. Okay, but this is not quite done yet on the 10-year Treasury yield. For confirmation, I would like to look at the dollar index, because this is the one that we can actually measure, and dollar index does suggest the potential for this one to go up to 106. We're not there yet. Momentum still points to the upside. We could be looking at 127.2 on the dollar index. That is actually at 106. So there's still potential for the US dollar to strengthen, and that would be in line with the view that we have with pound USD, that we could be potentially looking at a hidden bearish divergence. Now, for those that are confused, what is a hidden bearish divergence? It's when price creates a lower high, but the stochastics creates a higher high, and that creates a continuation pattern. that's hidden bearish divergence. Therefore, we are assuming that the market is likely going to continue to go down. Now, I think this is a great trade to take a look at because if this one does close below 23.6%, that would mean a close below 1.2075. Then it provides a great risk-reward ratio in terms of potential target, in terms of potential stop losses. We kind of know where the stop losses are going to be. It's likely going to be at around 1.2150. Okay, so it's going to give you about 85 pips in terms of stop loss. If you're okay with that, the potential gain for this one, it's at least 100 plus on pound USD. Yeah, tomorrow's Bank of England interest rate decision. Do I have any advice if Fed decided to increase interest rate and Bank of England does the same? Yeah, there's a potential for Bank of England to hike by 50 instead of 25, but I don't think it will have enough to counter whatever the FOMC is doing. I don't think it will have enough to persuade the market from thinking otherwise, that the US dollar is going to get stronger. Again, I mean, if you put into the whole context of the trading, we've got FOMC. The whole world is watching FOMC. Not everyone is watching it. Not everyone is concerned about Bank of England. I'm concerned about Bank of England, but in terms of pound wise, I don't think it has enough to counter what FOMC is doing. Worst case scenario, if they do hike only by 25 basis points tomorrow, Bank of England, that is going to be really bad for cable. Okay, so enough with cable. Let's jump into Euro USD first, and then we'll talk about the yen crosses later on. But Euro USD right now, if you take a look at this one, I'm just checking if we have any news coming out, but I don't think we have anything yet. Okay, I don't have anything yet on Euro, but this one, again, is it a divergence like in the pound USD? It's not. Because if you take a look at this one, it does create a higher high on price. It does create a higher high on stochastics. So there's actually no divergence on the euro. So yeah, euro is a little bit unique. I would say if you are not someone that's familiar with trading the euro, today it's not the day to be taking a position on the euro. If you're worried about the risk from the ECB and the FOMC, there's a lot of risk right now on trading the euro. Just be mindful. There's going to be a huge volatility in the market. If you take a look at this one, I mean, the average volatility on this one is already about 100 pips, so that's really huge, right? In terms of Fibonacci's and whatever not, right now it's going to be tough because we do have an extension from this one, right? It stops at 127.2, but we currently have a retracement that's bouncing off from 78.6. So, but the momentum does point to the downside. There's a lot of risk involved with trading the euro right now. Just be mindful of that. We could see price do this, right? Now we're talking about the hourly. I'm pretty sure it's gonna break above or it's just gonna drop down below 1.04. But again, from the outlook, I did talk about 1.04. 1.04. We don't want to see a daily close below 1.04. Because if we do see a daily close below 1.04, then I think the euro is done for. We could potentially see a downtrend continues on the euro USD. But right now, we do have 1.04. That's likely going to hold the euro together for a bit. But that's pretty much it. I think the way to trade the euro is just to let the momentum go down, all the way down. Let it become oversold, at least on the hourly time frame, and then jump back in. Because if we are waiting from what the ECB is going to say, are they going to be hawkish? Are they going to be dovish? We don't know, because there's a potential for ECB to say, look, we're not going to hike interest rate because the yield is too high right now in Italy and stuff like that. So they don't want to cause anti-euro fragmentation right now. They don't want to see the same thing happen 10 years ago. We have the EU summit to talk about the Greece bailout. I think it was 2012 or 2013. Let me just think about it. I think it was 2012. Pretty sure it was 2012, but I was there. I know what's going on. So we are basically back in that situation right now. The only signs that we have right now is potential signs on the what works 10 years ago was the candlestick patterns was showing signs of it. Okay, are we seeing signs from the candlestick patterns in terms of potential changes? We have reverse. We do have a reverse hammer twice, twice in a row, and then we do have support at 1.04. So what I'm looking for right now is that I don't want to see a close below 1.04. If we do bounce off today, if we have a break above 1.05 today, that's what considered to be great for euro, because at least we kind of know where the euro is likely going to go. So I'm going to cap it to 1.05 and 1.04. If you see a daily close above 1.05, then think about, if you're thinking about potentially buying the euro, then wait for that break above 1.05. If it closes below 1.04, then go with the flow. Just do not counter this. But whatever you do, today is it's a very high risk day. No one knows that there's going to be an ECB meeting today. It was unscheduled. Again, this was because the yield on the euro bonds was really high following the press conference from ECB. Okay, so let's take a look at this big gap on VIX. Oh, right, I haven't talked about VIX, but yes, there are gaps on VIX, and if you take a look at VIX right now, it's back up to above 32. If it goes above 34, then yeah, it's just gonna get worse. It might close the gap. I don't think it's gonna close the gap. I think it's still gonna stay above 30, at least for VIX. Okay, so yeah, you guys get the whole idea with what I'm trying to say with the whole ECB and the FOMC situation. We have retail sales coming out from the US in about 10 minutes time, but let's go with the request and take a look at stuff. So we got sterling Swiss, selling sterling Swiss at 1.21, stop loss at 1.2115, take profit at 1.9950. Sterling Swiss will go down in a second because the trend is bearish. How about that? Will sterling Swiss go down? Let's take a look at that. I think we have the same hidden bearish divergence forming. Stop losses at 1.2150. I don't have an issue with that. That was from this high, yeah. So that's beyond that high. That's not a problem. You got a shot at 1.21. Okay, so that's basically that. Stop loss there. Likely higher in terms of target. 1.19950, about 1.2. 1.19950. I would have it at 1.2 instead of 1.995. No point putting it at 95. I'm okay with 1.2. It's probably safer with 1.2, but we are potentially looking for a potential extension here on the sterling Swiss. Sorry, it's actually this one here. So sterling Swiss, if you already have a position, it's still within the Ichimoku cloud though. Just be mindful of that. But more confirmation is necessary if you want to see a break below that, and I need to see a break below 1.2075 before I can trigger a sell on this one. But yeah, I mean, that's okay if you have a stop loss at 1.2150, but ideally I want to see a position with something like that. I think that's much more ideal. But yes, I mean, stop loss wise, it doesn't change. So I mean, if you want to jump in right now, just think about it. If you jump in at 1.21, that's okay. I think that's great. You got a 25 pips jump start. But if you are waiting, then if you take a look at this one, pound USD and the pound Swiss, we're probably looking at about the same number here, 1.2075 and 1.2075 on both currencies. Okay, so yeah, I think it's okay. A little bit too early for my taste, but if it does if the stochastic goes down, or if price closes below 1.2075 or below the Ichimoku cloud again on the hourly time frame, then all good on the selling Swiss. I don't see a problem with this trade. Unless you know your stop losses, you're risking about 50 pips. That's completely reasonable to me. I think that's really reasonable. Risk reward ratio for that trade is 1.78. That's still okay. I think it's a great trade. So yeah, good luck with that. So yeah, we'll talk about yen in a minute. Let me just go through a few stuff. Aussie Canadian. I don't think I have my Aussie Canadian. I got my Aussie Canadian here. Nothing much to see with the Aussie Canadian. It's within the Ichimoku cloud. There's a high risk if this one goes down. It's still going to be trapped within the Ichimoku cloud. So just be mindful with Aussie Canadian. I don't think it's great. At least not for me. There's a few reasons why. If you go short on the Aussie Canadian, look at the daily. The daily is attempting to bounce back up. And if it does closes like this, then we have a full bullish engulfing on the Aussie Canadian. So yeah. Again, if you take a look at this one, why this one is not a good short? Because we do have a strong support coming in at 89 cents. Okay, so that's gonna prop Aussie Canadian at this today. Okay, let's talk about yen. So you got two views on yen, right? You got one view from the dollar yen, the other view is from the all the other yen crosses. Let me just bring this into perspective. Okay, much better. Okay, so dollar yen. It's going to look different from the euro yen, Aussie yen, sterling yen. Reason is, we talked about this at the beginning. Sorry. Reason is this. There was a joint statement from Bank of Japan and the government in Japan about potentially intervening if yen weakens, right? Now, obviously everyone's going to be looking at the dollar yen as kind of like the guidance. Oh yeah, how weak is yen and stuff like that. But I don't think it's a fair comparison. I think it's a little bit misleading, because if you take a look at the dollar yen, we've got dollar strength pushing it up, right? So whatever Bank of Japan says and whatever the Japanese government try to do, unless they physically intervene in the market and they say like, you know what, we are buying Japanese yen, just like what they did during the tsunami. We're not going to be looking at any potential changes on the dollar yen as of yet. Right now, we're still around 135 yen to 136 yen. 135 yen to 136 yen, that's your key resistance. That's likely where price is likely going to stay. Now, even if this one goes down, let's say this one pull back down 500 pips, back to what, 130, 131. It's still not going to change a thing, because from the perspective, the dollar yen is still strong. Overall, it's still in a bullish market. It's not going to change the outlook. It's not going to change anything. Is it going to save? It's not really going to do anything. Okay, that's one. Dollar yen, it's unique because we got dollar strength behind the movement that's going on with the dollar yen. Let me just pull up sterling yen, right? You're looking at a totally different scenario. Okay, you can see how for the past 4 days it's been dropping down. Okay, ever since Friday it's been dropping down. Ever since that joint statement, all the yen crosses are falling apart. Sterling yen is losing steam. Dollar yen is not. Dollar yen is just maintaining the position up there because the dollar strength is there. But if we talk about the sterling yen, the euro yen, they're different because we don't see sterling strength. We don't see the euro strength. We don't have anything backing this one up. Okay, so yen is going to be unique. You do not take dollar yen as a guidance for potential weaker yen at this point in time. It's not. Take a look at sterling yen, for example. This one, that's a buy on sterling yen at 162.75, targeting 164, stop loss 162, breaking recent high. Just be mindful with sterling yen because this one could drop down to 157.25. Now, if you take a look at the hourly perspective, we might get that 162.75, targeting 164. Stop loss is at 162 for intraday trade. A little bit risky. Overall, if you take a look at this one, this is below the Ichimoku. There's a lot of risk involved with sterling yen at this point in time. I don't really want to go with the flow on going long sterling yen. And considering that we are looking at potential hidden bearish divergences in sterling Swiss and sterling cable, right? We are potentially looking at sterling weakness here. So be mindful with sterling yen. I don't really want to go for a long at this point in time, even if it's so tempting. There's a potential bounce to 164 and stuff like that. This is probably the fib you're looking at. Be mindful, 163, that's a 61.8% Fibonacci retracement there. So we could be looking at a cap going on with sterling yen. So if you do want to go long, 162.75 was that. And then stop loss at 162, targeting 164. Risk reward ratio, that's okay, but you're risking a lot. Okay, so I'm assuming you've gone long on this one. If you are long on this one, make sure your stop loss is not exactly 162. Make sure you want to have it slightly lower, around 161.75 and potentially 161.50. Then, risk reward ratio is going to be about 1-to-1. Is it worth it? Think about it. There's a lot of risk involved in this one because you're trading against the Ichimoku Cloud one. You're trading against the trend too. So be mindful of going long sterling yen. I much prefer to see a break below this trend line. Then if there's an hourly close below 162, I much prefer to trade that. How about Bitcoin? Is it still bearish on daily but stochastic on the hourly was starting to go up? Is it okay if we go long? Do not go long on Bitcoin. Let me go through Bitcoin in a bit, okay? Why is my notification not popping up? But we got retail sales. Retail sales down negative 0.3. Consensus was for a gain of 0.2, 0.3. I don't expect any changes in the market right now. Not from the retail sales number. So it's not going to have an impact on the market because market's just waiting for the FOMC tonight. Okay, yeah, we'll talk about Bitcoin. You know what? We'll talk about Bitcoin now. So Bitcoin, this is seriously concerning. One, so if we go through what's going on with 30,000, right, as a pivot, we passed that, okay. Are we past that for the week? Yes. So we actually past that 30,000 level. The drop is so bad right now. Honestly, I'm not into crypto fundamentals. So but it's kind of ridiculous right now how the crypto market is moving. It's taking on the same characteristics as a risk asset that's actually that actually has something to do with the Fed, but Bitcoin obviously doesn't, right? The only thing that does affect this is the USD tether behind it, but that's pretty much it. Okay, so the hourly does point to the upside and blah 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 stochastics. The Ichimoku is still bad. I mean, it's still pointing down. It's such a drastic drop. Whatever move it's doing right now, it's so risky to take on. If you want to know what's going on with the whole Ichimoku cloud and stuff like that, we are right now at Kijun Sen. So this is likely going to cap it. I would really disregard this and just look at it like that. Okay, now if I don't have anything else and the only thing I have is Ichimoku Cloud, it's kind of dangerous to take a long right now. One of the few things is that the Tenkan Sen is actually still pointing to the downside. The Kijun Sen is flat. Therefore, you could see price dip down like that. We don't really have anything significant. We are at a 20,000 level. I mean, it only took what, 2 weeks? Is it 2 weeks? I don't think it was even 2 weeks to get from 10,000 to 20,000. It's just 1, 2, 3, 4, 5, 6. It's within 1 week it dropped down 10,000. That's a lot, right? I seriously don't want to go long even for an intraday trade. I don't think this is something you dabble on for fun. I don't think it's that situation right now for Bitcoin. I don't think it's the hype train anymore. So be mindful with this. So yeah, that's okay. Is Bitcoin going to 17,000 back to 20,000 2017? That's kind of the next point. So if we zoom out a little bit, we don't normally talk about Bitcoin much, right? But let's talk about Bitcoin. In terms of the Fibonacci, which one do we take? We actually cannot use this one anymore because this one bounces off 50%. So the next one that we can use is actually this one. That's kind of the guidance that we have. It's potentially going to pull back down to 17,871. That was basically that. We're basically at that December 2017 low at 20,000. It's going to go down to 17,000. We could potentially do worse with this one. We could go back down to 16,000, 15,000, 12,000. Okay. So that's a lot riding on this one. I don't think this is something you do for fun anymore. Okay. I don't think it's time for you to be saying, oh yeah, you know what, it's cheap, time to buy and stuff like that. We just don't have that sign yet. Yeah, I mean, I could be wrong. I mean, we could bounce off 20,000. It could go back up to 30,000. You know, then that will probably give you a wrong outlook. Then, you know, that's like a 10,000 gain, whatever. But it's just that we cannot look at it from the early perspective right now. At least from Bitcoin, it's much reliable to just wait for any signs from the daily time frame because we're talking about a huge range here. 10,000, right? That's huge. That's like 20% of the value of Bitcoin anyway. It's actually more than that. It's 1/3 of it. Think about it. We just lost 1/3 in value. We go down from 30,000 to 20,000. We lost 1/3. That's a lot, right? It's about 30% that's gone in a week. So yeah, I mean, taking a look at Bitcoin, we don't have any signs yet. You know, I've been looking at this one. I know this question is gonna come up. I know I've been writing reports about it anyway, so I know what I'm talking about. I've been following what's going on with Bitcoin. The drop from 30,000. In all honesty, 30,000 was kind of the final threshold for me. If it dropped down to 30,000, then we're in for a lot of pain. We are at 20,000. We haven't really touched 20,000 yet. But if we do touch 20,000, then we need to wait for a weekly close above 20,000 to even say, yeah, you know what, we're starting to create a bottom here for Bitcoin in the short term. We don't have that yet. We really don't have any significant bottom yet on Bitcoin. So the only thing I'm looking at right now, yeah, 20,000. That's kind of a whole number. It's a psychological number. So, you know, if you're planning to trade Bitcoin, if you're planning to go long Bitcoin, what's your target? Because if you go by the target here, how far can you go with this one? Maybe 20,000, 23,000, and that's pretty much it. Is it worth it? I mean, it's up to you. It depends on how big you trade anyway. But if you're planning to jump in and grab a lot and then hold it off, just be careful. I don't think it's time yet. We just don't have any significant bottom yet on that. We're not at 20,000 yet. So judging by how price is, price dynamics, and we talk about price dynamics, then there's a high potential this one is likely going to touch 20,000 again before any bounce back up. So even if you go by the hourly time frame, to be safe, you need to wait for a close above 23,000 to even go long. And even if you go long at above 23,000, your stop losses is going to be below 20,000. Okay, that's a lot in terms of target. How far are you going to go? You know, you're probably going to go back up to maybe about 25,000, 25,500. Risk reward ratio doesn't look great. If you're thinking this is going to go back up to 30,000, sure, it could do that. It's just that we don't have any signs of it yet. So be mindful of what's going on with Bitcoin. And if you want my outlook on Bitcoin using Ichimoku, I'm more worried about where the Tenkan Sen is pointing right now. The Tenkan Sen is still pointing to the downside. The Kijun is actually flat. So we actually have a resistance right there. Right around there. Okay. So about 21,500. We got a resistance at 21,500. If there's no hourly close above that, then we're not going to be seeing much. Then above 21,500, we are not looking at this, a small gap, right? We're looking at a $500 gain here and there. So if you're okay with the risk, you know what you're doing. You are okay with trading cryptos on CFDs. It's still not a great time to just go in long. We don't have anything significant because whatever we're looking at in the market is a strong downtrend in the market. It's just not a lot of confidence in the crypto market, especially in Bitcoin right now. So yeah, I'm not saying it's not going to bounce back up. I'm saying what I'm trying to say is we're so close to 20,000. It's likely going to get pressured to 20,000 before we see any significant support on Bitcoin. How long is it gonna go? In terms of how low it's gonna go, we have 16,000, we have 17,000. There's a lot of talk about it, but my personal floor is at 30,000. That one gone. This is no longer interesting. I think this is borderline dangerous. Okay. I mean, if you're okay with the risks and stuff like that, why go against the flow? I mean, I just said that it could potentially go down to 20,000. You should be thinking about a potential short on Bitcoin USD if you're trading intraday, and 50 minutes drops down below 80. Right? I'm just saying, but it's just not my style. I just don't trade Bitcoin on an intraday level. I'm not there yet. Okay, I'm not a huge crypto enthusiast. You guys probably figured that out. Okay, asset allocation on crypto, it's not a lot. It's really minimal. Okay, but I'm not a big fan of crypto. But if you are and you're okay, you're comfortable with doing crypto trades on a shorter time frames, then maybe take a look at the 50 minutes. Okay, you got your limit at 21,500. You got me saying 20,000 there. The potential price dynamic is that it's gonna get pulled back down. There's a huge potential this one's gonna get pulled back down to 20,000. The retail sales number is it's bad. from the US. It's negative 0.3. Expected was a gain of 0.2 to 0.3%. What do we do? Nothing much. I think what we have outlaid here is it's dangerous touching the euro right now with the whole ECB thing. With pound USD, I want to see an hourly close below 1.2075 before I want to trigger a short. So out of today, there's only potentially two good trades here with the pound USD and the pound Swiss. Okay, that's pretty much it. Pound yen, not too keen on pound yen. I don't really want to go short pound yen yet at this point in time. I don't see any divergences yet on pound yen. Euro yen, again, I just don't see anything interesting here. We do have a couple of gaps on the euro yen. Momentum still points to the downside, but the hourly is inside the Ishimoku cloud, so a straight no for me with the euro yen. Aussie yen, it's inside the Ishimoku cloud as well, so again a really easy no. Aussie USD inside the Ishimoku cloud, again I'm not too keen on whatever's inside the Ishimoku cloud before the FOMC. It's just ridiculously risky. It would make tonight FOMC more horror, more terrifying. Yeah, in terms of volatility, it's actually going to be really bad. We just don't know what the FOMC is going to do. Are they going to go 50? Are they going to go 75? That's already a concern. And then we have the ECB unscheduled meeting right now. That's a lot of stuff. New Zealand USD. New Zealand USD 161.8%. We've got one fib that we can use actually from this one to this one. How far is it gonna go? It needs to. Okay, here we go. There's one low that's not been broken yet with New Zealand USD, and that's actually the 62-cent support. Okay, as long as it's on the daily, if it still bounces off to 62, we're not going to be looking at anything terrifying with New Zealand USD. How is this going to translate into the hourly time frame? Let me just go into the hourly. Pretty flat. There's a potential for this one to actually creep inside the Ichimoku cloud. But if FOMC does hike by 75 basis points, then I think we're going to lose that 62 cents support. Okay. If FOMC does 75 BP. Okay, so if FOMC does 75 BP, then we might lose at 1.62. Is it time to go short or anything like that? No, not yet. We're looking at a potential sign of hidden bearish divergences. Potentially, yes, like the pound USD. Because right now, we're not creating a higher high on price, but stochastic is already creating a higher high. I just need this one to turn around again. Between New Zealand USD or pound USD, I much prefer to trade the pound USD. But again, if you are trading New Zealand dollar, I don't see a problem with this one. Do I see a potential XABCD? I think so. Yes. But correction level 61.8%. That's going to cap it at about 0.62560. Okay. I'll zoom in a little bit and I'll draw it for you, but hopefully you guys can pick it up. But there's an XABCD. I believe this is a godly, it's not a butterfly. Or it's actually a butterfly. Okay, so we might be looking at point D. We might, because X to D is already what? It could go up to 78.6. So point D, we could be at point D, or point D could be at that. We don't have that yet because we don't have any confirmation from the stochastics. So point D could be that. But we're looking at a potential point D forming right now. The confirmation will come in from when the stochastics becomes overbought on the New Zealand USD on the hourly time frame. Okay, I don't have a point D right now. I just don't have a clear confirmation of point D. But if you're trading the New Zealand USD, then you can probably apply this butterfly into your trade as well, because you by then you would know the target. It'll be at 62. Got it? Okay, I see some trader on YouTube that uses smart money concept. Okay, that's a lot of definition of smart money. They're using a risk reward ratio of more than 1 to 10, but entry with 1 minute. What do I think? It's really dangerous because if you go by risk reward ratio of 1 to 10 on the 1 minute time frame, let's say you are risking 5, right? Potential gain is it's 50. But you're only giving room of about 5 pips. I kind of know what this strategy is. It's really more of a mitigating strategy, so be mindful of that one. A risk reward ratio of 1 to 10 typically won't happen to you unless you're a long-term investor. Okay, if you're trading if you're investing, then that's a realistic goal. But if you're trading short term, especially on the 1 minute time frame, a 1 to 10 risk reward ratio just doesn't click. Because how far is your stop gonna be on the 1 minute time frame? And however stop that you have, it's just not enough room to give to the market. So I'm not saying it's not possible. It's just that it's too good to be true, especially on a 1 minute time frame. Okay. Okay, what's my opinion about? I'll take a look at gold, Kingsley. Don't worry, I'll spend time with gold in a minute, but I'm gonna answer the question on the FOMC first. What's my opinion on Bitcoin? As I say, this is really ridiculous, right? I mean, the whole thing with cryptocurrencies, as I keep saying, is that it really wants to be decentralized. But right now, the whole risk that's associated with the market. So you basically have crypto. Something new, something that's supposed to be decentralized, something that's not supposed to have anything to do with the FOMC. The thing is, the people trading it, it's no longer about mining it, right? It's no longer about enthusiasts. We now have people that trades it and think that it works the same way as if it's any other currencies. So the sentiment is this: if the traditional market, like the equity market or the currency market, if we see a stronger US dollar, then there's a likely chance the current Bitcoin market is likely going to have the same sentiment. Okay, so if the equity market falls off tonight, if the FOMC hike by 75 basis points, then the crypto market is likely going to have the same effect. I'm just saying it's ridiculous, but I've been looking at the whole risk as assets versus cryptocurrencies, whether we can consider cryptocurrencies being affected by the FOMC decision, not directly, but psychologically, everyone that trades the crypto market or everyone that trades the Bitcoin does have the same fear as the more conventional market. What I'm trying to say is, if you see the equity market fall off tonight, then you're likely going to see Bitcoin fall off. That's why I'm saying with Bitcoin, there's a potential of this one to go back down to 20,000. We're not that far off yet. Gold. Yes, I will. Once I get through with the whole FOMC first. What do you think of FOMC hiking interest rate by 50 basis points? They high by 55. What do you think? Okay, as I said earlier, we talked about this at the very beginning. The guideline was 50. Okay, market expectation was 75. Now, market expectation for 75 was because the consensus is this. I think a lot of analysts, a lot of economists are looking at this in the way that I'm one of them. Okay, the headline CPI number was 8.6%. That was higher than 8.3%. That was the expected high, right? We've seen the FOMC hike interest rate. At the very least, it's 2 months in. we should see a little bit of a drop off, or at least a flat inflation. But we have a higher inflation number. So with that, the FOMC might do 75 because they say, you know what, inflation is really hot right now. We need to do 75, and they could do that. They could say that. So if they do hike by 75 basis points, then yeah, you are likely going to see a market's already been pricing it in. Okay, if you're wondering what's going on with the US dollar in the past week, past CPI numbers, that's been pricing in for a 75 basis point hike. Now, if FOMC does hike only by 50, we are probably going to be looking at a non-reaction in the market. We are probably going to see a flat US dollar, a potentially strong US dollar. But I'm not leaning towards a weak US dollar yet. I don't think hiking 50 makes the US dollar weak. I don't think that is the case. So, regardless of the scenario, I'm concerned with the US dollar strength. Whatever you're looking at right now on the Euro USD potential for it to go long and whatever, if you have an intraday short-term trade, scalping trades, whatever trade, just be mindful of the FOMC tonight. Just don't ignore it, because it's going to create an impact in the market. And if they do hike by 75 basis points, that's the big if. Okay, if they do that, then the US dollar is definitely going to get stronger, because that is beyond the scope of what the FOMC say they're willing to do. Because at the previous press conference, I think it was about 2 months ago, it was talked about, no, it was actually the last press conference last month. Are they going to hike by 75 basis points? I believe it was from Stephen Lisman, CNBC, that asked that question. If FOMC is going to hike 75, Jerome Powell say, nah, they're just going to do 50. We'll see how it goes, but they are data dependent. Now, that's the reason behind the potential for 75 tonight. Okay. So if they do hike by 75 basis points, I think the US dollar is going to get really, really strong. Okay, let's take a look at gold before we wrap things up. Okay. So gold, we are back at 1840. We don't have a divergence in gold. So this is more of an inflationary hedge, the one that pushed it up, but the US dollar strength obviously pulled it back down again. Are we going to be seeing a potential bounce on the gold? Right now we have an intermediate base at 1810, so keep this in mind. I'm still more concerned about 1800, but pick your poison. You're 1810 and 1800. The hourly time frame is within the Ichimoku cloud. There's a potential for this one to go back down to 1810. I don't like where this is going. One, on the hourly fib, we are close to 127.2. So in terms of resistance, I don't have to do anything much, because 127.2 and 161.8% is actually 1840 and 1850. So I don't have to add anything new. If you're planning to trade this one, you could potentially look at 1840. If it fails to break above 1840, then there's a potential for you to go short. Just make sure your stop losses are just slightly above 1850. Okay, in terms of target, we're going to be looking at 1815. Okay, is it time to go in now? You got two potential scenario. One is this one goes down right now, or this one goes up slightly closer to 1840. I like scenario number 2 better, but if you're going by scenario number 1, then I want to see close below the Ichimoku cloud. So if you're planning to go short on gold, do so below 1825. Again, in terms of stop loss, maybe you can have a lower stop loss about 1840 if you go with the 1825. But in terms of target, I'm sticking with 1815 or 1810. Maybe 1810. It's reasonable. So you got two scenarios. Either you wait for a bit, or you go in hard really quickly. So this is scenario 1. This is scenario 2. Okay, that's for gold. I mean, you got two scenarios, and I'm honestly expecting one, gold goes up because it was a short-term inflationary hedge because CPI was high, inflation was high. But if FOMC does something to it, if it hikes by 75 basis points, then I'm expecting a stronger US dollar. Then obviously, if you take a look at if Fed hikes interest rate, it's bad for gold. So I'm in that camp where I'm waiting for gold to go bad. Okay, it could potentially go bad if it doesn't close above 1850. But in terms of resistance, we got 1840 to 1850. If it keeps failing at 1840, 1850, then I don't see any reason not to attempt to go short, because overall, in terms of going in terms of trend, it's still to the downside. It's technically still below the Ichimoku cloud. We're testing Ichimoku cloud as resistance. If it fails, then yeah, that's your cue. The other criteria is this one has already crossed. Yeah, just waiting for this one to drop down below 20. So let me zoom in on the stochastics. We got a new hour, we just switched to a new hour. Stochastics just crossed on gold. Let's double check with pound USD before we wrap things up. So yeah, pound USD, I think that's a go. We got a trade below 23.6. We got a close below 23.6. Stochastics just dropped down below 80. So yeah, that will be the same case with Sterling Swiss as well. So Sterling Swiss, Sterling USD, those are ongoing trade. Gold, just wait for a little bit. Euro, just be mindful of what's going on. Bitcoin, be really careful. Do I see a 75 to 100? I don't. I think I'm seeing 75. 50 to 75, I'm okay. 75 to 100, I don't think so. It's a bit too much. FOMC will hike 75 potential. I think there's about 70% potential is they're gonna hike 75. But 50 is at the minimum. I think they are going to hike by 50, at least 50. But I'm potentially leaning more towards that 75. If we do that, sees that 75. Yeah, I mean the market's gonna say it's scary, but we kind of had it planned out. If I much prefer to see it in scenario 75 because we kind of know that that's actually really good for the US dollar. We can potentially attempt to go short on anything against the US dollar. Highest accuracy between fib retracement and fib extension, we enter at 23. If you go with 23.6, then you are going to be looking at 61.8 and 78.6. If you go in at 61.8%, then you're probably going to be looking at an extension. That's why you jump in. I don't normally go in on around 61.8% because that's a bit too late. Okay. So, I think that's pretty much it for tonight. I need to remind you, we don't have any release schedule for the ECB. It could be any minute. I don't have anything on the ECB yet. FOMC tonight, but we have that ECB. Yeah, I'm just checking. We got something on the ECB, but I don't really have anything significant. Okay. So I got some news on the Euro ECB. Redemption from its emergency bond purchasing program. Yeah, we don't have anything major on the ECB, but they're probably likely going to continue with the asset purchases, which is kind of tough because it's going to be hard for them to hike interest rates soon. Okay, that's it for tonight. Thank you for joining in. I'll see you next week. Good luck with the trades. So yeah, be mindful with the FOMC tonight. Okay.